All right, welcome back. Now, let's take a look at how the markets are faring now. It has been a bit of a mixed trading session because there was a bit of cautious stances around the investor market. A lot of questions around the U.S. stimulus package, which perhaps is gathering some momentum and steam. Donald Trump yesterday also saying that Democrats in the Senate are indeed trying to call him up and ensure that some sort of deal is struck when it comes to that. So positivity in that sense. But the negativity, however, is that things seem to be escalating when it comes to the war between the U.S. and China, particularly over the relationship over Hong Kong as well. Plus, indeed, this Saturday is when the US and China will be reviewing their part one of that trade deal that they agreed to just before the lockdown then, of course, and when coronavirus, of course, stepped into perhaps alter proceedings as well across the board. So it does mean that it's about a 6-month review indeed since that trade deal was then signed between the two nations. So a bit of a mixed picture then as well. And even you'll find, though, that a lot of people, a lot of investors then took perhaps a little bit more out of the likes of the tech stock companies and perhaps looked more into value stocks as well and tried to see where exactly they could find some sort of potential. Of course, the Microsoft deal with regards to TikTok may be a little bit more complex than Microsoft had suggested or thought. So it may take longer than 45 days, which would be a very big problem, particularly for TikTok then, of course. What that means then for Microsoft will see very soon. But of course, Tencent has suffered as well because that's also been banned or is headed for a ban within 45 days as well and must be sort of sold off in some way. That means that Naspers locally has also taken a hit. We'll unpack that story quite sufficiently in just a moment or two as well. So as I said, bit of a mixed picture out in Asia, but positivity all the way through for the major counters out in the European market. The DAX out in Germany also going up there 2.5%, much the same as the FTSE 100 out in London. The CAC 40 in France also 2.8% better off on that front. Locally then, we've taken in a sense of positivity. It is a day back, of course, from that public holiday yesterday, and we've come back into a sense of positivity then. And one would have thought that perhaps with the negativity out in the US and China, particularly from yesterday, that we would have seen the market drop off ever so slightly today, but not to be. 1.33% better off. We're at 57,526 points on that front. 2.9% for the banking counters, meaning the financials have gone up quite usefully as well, with the resources climbing higher despite the gold index, which has maintained some sense of positivity of late. Today, there's a big fall, though, when it comes to that gold index as well, which actually stems from the fall in that gold price too, which is now below $2,000 a fine ounce on that front. That's a big 2.33% down. So too is platinum. That's down to $959. It looked at some stage that it was going to hit $1,000 a fine ounce and perhaps even touch that mark for a brief moment or two, but unfortunately has pulled back quite dramatically. Investors perhaps looking back towards the market in equities in particular, hoping that the stimulus efforts out of the United States will certainly push the market along at this time. Whether there is a recovery in those equities a little bit further on is yet to be seen. Of course, we have seen the likes of the NASDAQ go into some record territory there. But Brent crude has gone a little bit higher, 1.33% better off there. So more stimulus hopes, hopefully getting things through there. Plus, we're seeing Asian demand perhaps pick back up, which is certainly helping on that front. So if you have more demand, that price is bound to go a little bit higher up as well. So we're sitting at $45.59 a barrel on the Brent crude side. Some strength, though, for the local currency, but it's only marginal, right? Because it was still above that 17 rand, 17.52 to be exact, 20.66 then for a euro. A pound sterling will set you back almost 23 rand. In fact, sat well above that mark a little bit earlier on this morning. Let's get into the grips of all of this information and even some company news as well. Chantel Marks from FNB Wealth and Investment joining us today. Chantel, thank you so much for the time. Really appreciate it. Very difficult to look at this market and say, gee, we know exactly what's going on, but it seems that the US and China will certainly hog the reporting as well as the headlines.
Yes, absolutely. I think the overwhelming sentiment in the market probably remains negative, but we have a much better day today and quite a positive day today, mostly on those US stimulus hopes and the fact that it seems as if COVID-19 infection rates are coming down, at least in some of the larger countries in the world. In the US, it's still climbing, but it's slowing down, and all of this is making market participants a little bit more positive around the future. And that's why you see the oil price up, that's why you see stocks up, and that's also why you see the gold price coming down and the silver price even more so.
How much does that hurt things like that gold price then? I mean, we were at 2,000 and above, well above. In fact, it looked like we were heading for $2,100 an ounce at some stage, but now we're sitting at 1959, 1978 actually to be exact now. It seems to be a huge vacillation with regards to that gold price.
Yeah, so you'll probably see the gold price oscillate around these levels in the absence of any meaningful good news and in the absence of any meaningful bad news. Of course, if news is bad, we'll probably see the gold price continue to move upwards and probably stay above $2,000 an ounce. If the news is good, though, it could go down by quite a margin. I know that Barrick Gold CEO yesterday apparently said that he sees the long-term gold price at around $1,200 an ounce. That's significantly lower than the levels that we're seeing right now. But it does assume that the world normalizes. This is a long-term level, right? It's not going to happen overnight. Still, a lot of negativity and a lot of pessimism in markets could see it be supported around these levels or even slightly higher for quite some time.
All right, well, we'll see how things fare on that front because, of course, it is the safe haven that everyone turns to when things do get rough. So we'll inspect that one a little bit later. But let's get into some company news now, Chantel. Locally, Sasol then becomes another big story. It's continued to be a big story for most of this year and for quite some time as well. Today, then, getting even more news that they've had to write down more than their own market value. That's absolutely huge for that business.
Yeah, and it just shows you how low that market value still is relative to where it was way back when and relative to its overall asset value. What they have done is they've released a trading statement which basically says that core earnings per share, so if you exclude all these asset write-downs and other non-cash events, is probably still going to be positive and decently so. And earnings per share is going to sum to a loss because they are writing down the values of these assets. You would have seen the share price was up 3.5% or is up 3.5% so far today. It's been oscillating between gains and losses for most of the day. And that's because people really don't know which side of things to look at. Are we going to look at the core performance, the operational performance, the actual cash flow performance? Or are we going to focus on the fact that they're writing down a significant chunk of their asset value? For now, as things stand, it seems as if the market is opting to look at the core operating performance rather than these write-downs, and to hope that these are the end of these write-downs, that Sasol have basically kitchen sinked it, and they've written down what they need to write down, and they can now continue looking forward.
Yeah, so is the rights offer or the rights issue that has been mooted for quite some time for Sasol a last resort then? I mean, they are looking to, of course, get a partnership out in the United States, sell off a few assets here and there as well. Is that perhaps just delaying the inevitable?
So that's the several million dollar question at the moment. So it's quite nuanced, but they actually didn't mention the rights issue in the trading statement. And they usually mention it, or they've been mentioning it for at least the last 5 or 6 months in every single communication that they've made with the market. But the fact that they've written down quite a big chunk of their assets will result in their debt looking a lot bigger relative to their asset base. And that might force them into a situation where they have to issue shares to raise cash to pay down debt. And that will be enforced by their lenders. As far as I understand, they do have a stay of execution on their bank lending covenants, which means that those are the ratios that they need to adhere to in order to continue to hold the debt that they have. So they apparently that's on hold until next year, but we'll have to wait and see and check if they can actually get these asset sales through, because that will be the major determining factor, I think.
So interesting. That stock has certainly been part of very nervous trading over the last year or so, if not even longer. Chantel, that is where we're going to have to leave it, unfortunately. So much more we could have unpacked as well then today. Certainly an interesting market movement then. More than 1% gain for the JSE All Share. Chantel Marks is from FNB Wealth and Investment as we unpack that market movement.